Welcome back. You're still tuned into Trading Hour, and in its latest report, India Ratings and Research has noted that unsecured business loans are showing early signs of stress in asset quality. They believe this comes on the back of increasing competitive intensity, pressure on cash flows, and a lot more other reasons. There is a need to recognize the rising delinquencies. To discuss this and more, we are joined by Pankaj Naik, the director at India Ratings and Research. Mr. Naik, good morning. Thank you so much for joining in. Well, can you give us a sense of what are the early indicators that are suggesting that there could be pressure and there could be early signs of stress in the unsecured business loans?
Right. So, we have been tracking this segment for quite some time, and in our outlook for FY25, we did mention that this particular segment will see some kind of a stress because of some over-leveraging on the borrower side and also because of strain on the cash flows at the borrower's end. Some bit of aggressive lending by the NBFCs also is responsible for this kind of stress. So the early signs that we are seeing right now is basically incremental delinquencies have gone up, the write-offs have gone up, and the credit cost that is hitting the P&L has also started impacting the profitability. So I think these are early signs which we are seeing right now as far as the business loan balance sheets are concerned.
So Pankaj, you've laid out the reasons why we are seeing increased stress. But could you quantify the extent of the problem in the market right now?
Sure. So these business loan balance sheets or the P&L are designed in a manner that they have to absorb a certain level of credit cost. But we are seeing credit costs which have crossed that particular band. So the credit cost is in a range of around more than 5%, 6% odd. Now, more than 5 to 6% odd credit cost, which includes your write-offs as well as your provisioning, starts hitting your pre-provision operating profit buffers. And that actually impacts your profitability. And in many cases, the P&L ends in a loss. So that's the kind of impact which we are seeing on the P&L of unsecured business loan players.
And we already saw signs of that in the quarter gone by, in Q1. Many companies we spoke to, referred to the problem that you're talking about, this stress in unsecured lending. Has it become worse in the July, August, September? What is anecdotal evidence telling you about the recent months, the current months?
Right. So what happens is generally Q1 is a very lull quarter. Not a lot of balance sheet growth happens in Q1, because of which the top line doesn't grow, right? So whenever the balance sheet doesn't expand, all these problems start coming to the surface. And that's what we are seeing right now as far as the unsecured business loan is concerned, because a lot of income is getting generated by disbursing these loans by way of processing fee. So when you don't generate that income, obviously your top line is weak and the credit cost starts impinging on your P&L.
Pankaj, you said there is continuing pressure on cash flows in certain end user segments. Which are these segments where we are seeing the most amount of pressure, and is there any particular geography where we are seeing the most amount of pressure?
Well, the segments like food segment, textile segment, these are some of the segments that have come to our observation where we see elevated amount of stress. And if you talk about geography, then there is no one particular geography per se where we are, kind of observing this particular stress. It is geography agnostic, because there are quite a few fintechs which are doing this particular business. They don't have a branch-based model. They do it digitally. So a geography cannot be highlighted where these problems exist.
And how much higher are the credit costs in Q2 versus Q1?
Sorry, Q2 numbers are still not out, but the Q1 number looks very, very elevated as compared to, say, an FY24 number. So 3 to 4% credit cost has now basically gone into 5 to 6% kind of a trajectory.
And is there any, kind of a geographical, analysis to be made? Are there any particular, markets where we are seeing increased stress?
Well, there is no geographical trend per se. But it is more or less a pan-India phenomenon. And more or less, these entities generally, which are fintech players, they operate digitally. So, they themselves are geographically agnostic, when they do their lending. Sure. It's purely based on cash flow analysis and the basic data that they can procure digitally.
So because, this, the issue that you're highlighting, there will also be an impact on the growth under assets under management. The AUM growth will also get impacted. So what was the anticipated AUM growth earlier? And because of this stress, the fact that provisioning is now going up, what could be the decline?
Yeah. So these balance sheets were growing at a considerable pace. I mean, it was easily around 30, 40, 50% kind of growth that was visible as far as the unsecured business loan segment is concerned. Now, of course, that growth was happening on a much, much lower base. But if I look at the Q1 numbers, then a Q1 balance sheet size vis-a-vis, say, a March balance sheet size, it's flattish. It didn't grow much. Now, yeah, one may argue that Q1 is any which way is a lull quarter, and that's why there was no expansion. But it is also because of cautiousness practiced by the lenders, funding non-availability probably because of which the loan book did not grow, asset quality pressure which they are themselves seeing, which told them that they have to go slightly slow on that. So AUM growth definitely has taken a beating.
So AUM growth has taken a beating. What about capital buffers? Are they also impacted because of this? And what happens to the return on asset because of this? Is this something that could be a cause of worry going forward?
Yeah. So thankfully, the capital buffers are in a very, very reasonable band. All of them are operating in a leverage band of around 2 to 3 times, which is kind of an okay leverage given the retail nature of the balance sheet. But if I have to look at the AUM growth, that has taken a beating. The return on assets under management, and here we have to typically talk about return on assets under management rather than return on assets, because a lot of business is generated through the off-balance sheet route. So the ROAUM, the return on assets under management, has actually become very, very flattish. So a blue sky scenario probably would generate a ROAUM of 2 to 3%. That is less than 1% now. Some of the balance sheets or some of the P&Ls are actually in the red. So on a console basis or on an industry basis, this is in a single-digit ROAUM band.
Okay. Last question before we let you go, Pankaj. You also spoke about some competition coming in for the segment. Where is it coming in from? Is it at an early stage, or we are somewhere in the middle and it's a little difficult for the institutions to get out of it?
Right. So repo rate started going up from May 22, right? It went up by 250 basis points odd. Now to maintain margins, NBFCs who are not doing unsecured also started doing unsecured lending, because that was the only way to protect margins, right? So because of which, what happened is there was a lot of lending that happened in FY23, FY24, and these were the fiscals where there was a lot of pent-up demand because the previous fiscals were impacted by COVID. So FY23 and FY24 saw a lot of revival in demand that happened, because of which there was a lot of lending that took place, not just by the pure unsecured business loan players, but also by other traditional NBFCs who were not doing unsecured, but were only in secured products. So because of this, there was a lot of competition and heating up in the market. A borrower was spoiled for choices, because of which the over-leveraging also happened at the borrower's end.
Okay, we leave the conversation here. Pankaj, thank you very much for joining in. By the way, the Nifty is now pushing towards 25,400 and the Sensex has extended its gain to more than 500 points. So things are looking up. Stay with us. Halftime report will be up after the short break.